I'm an investor and I'm an educator. So co-founded this financial gym with Emins on conduct regular class on wealth-related subjects. So again, full disclaimer: the full content of this so-called these slides, this presentation is for educational purpose only and should not be used as an investment recommendations. So that's something that you need to be aware. Okay, so in the next 20 to 25 minutes or so, I'm going to talk about these 4 very quick topics, and this is basically my opinion. Is about US market and STI towards the end of the year, the existing risks in the market, short-term bull and short-term bear. All right. So before I will go on to this, my own TA analysis, and I'm glad just now you all have done the predictions, the STI predictions. I can see that, with one glance of the results, I can see that more are actually inclined towards bullish for STI. Because I was about to ask questions, whether you are bullish or bearish, but since Emi asked that question, I can see that overall a lot of people are still bullish with STI, which is good because that basically represents the average opinions of investors, and therefore the market will move in the same direction. So that's how I feel as well. Now, for those who are maybe you have or you have not invested in the US market, that doesn't matter. The more important thing is that maybe perhaps I should ask these questions. How many of y'all will actually think that the US market is bullish and continue to be bullish to the end of year? If you think that it is bearish, you type a 0. If you think it is a bullish, type a 1. If you do not know, you have not invested in US market, just type a 2 so that I will have a gauge of how you all think about the market itself. Any more? Okay. Thank you. More? Okay. Okay, thank you. Thank you very much. Okay, thank you. Okay, so we have quite a few that do not know. So presumably you have not invested in the market, or you are basically didn't follow the news. Doesn't matter, because more importantly is what you all feel. And I can see that there are quite a number of bearish as well, although more are bull. So, okay, no problems. As I said, this is only opinion. It doesn't mean that what I say is correct, because, the market is very dynamic and nobody would dare to say that he can tell the, the index correctly at that particular point of time. Okay, I will just show off very quickly on my chart itself. So first of all, I want to look at Dow Jones. This is the chart, but I will rather show you the exact chart on live. So what the chart is actually show is that you can see that this is basically from November last year that I plot all the way till today. Then there is another one which is on a different projection trend. So this is a bit more aggressive. This is more like normalized things. Now, based on the trend itself, there is no sign that this Dow Jones is in a bearish cycle. So what you see, or rather what we have noticed, the market has been go up, go down. Even the last Monday, there was it was at one point of time was down by 800 points or 900 points. It was just a fear here. And then the next day, which was last night, the market sort of like rebound very quickly. But as you can see that the Dow Jones sort of like go within the channels very well, right? And for a TA guy, we just have to respect the rules of TA. So if I would project further up, it only seems to me that it will continue to go up towards the end of December. And if there's any corrections in between, either you will have to get out of this channel, or these are the lines that what I will call the support line. All right. The support line particularly is on 33,000 and 31,000. All right. So that's on the Dow Jones. But then again, as I said, going forward for the next 6 months, it seems like it's going on a bullish cycle, right? Now, then the next one, I will look at the S&P 500. Now, S&P 500 is the same thing. It's the same thing. If I would zoom out for you all to see, it has been continued uptrend. There is no sign of showing weaknesses at all from a on a long-term perspective. You see from October, or rather from November last year, the index just going up non-stop. And then and looking at it, if I were to draw the trend line, the S&P would probably end up around 4,800, this range. All right. Now, as I said, again, this is all TA. We only based on projections. Would anything happen in between? There may be. All right, there may be. But based on the statistics, the numbers, and the trading volume, it is still very well supported at this point of time. Now, how do I draw this line? Basically, is this: I have two lines. One is the what we call the pessimistic line, and the other one is optimistic line. And right now, because the support line has been so strong, supported by all these huge trading volume, it only seems to me that all these price here are very well supported, right? So anything between 4,001 to 4,002, these are all very heavy supported region. So even if they would fall out of these channels, it will still be supported by all these areas. And if, of course, people, they're talking about a huge corrections, which is possible. Like, for example, the Monday, the market was corrected unexpectedly. Well, sort of like unexpectedly early, let's put it this way. S&P sort of like hold up very, very well. Dow Jones was, one straight line down, but you can see the S&P was just only move a little bit. It wasn't a big fall, and then the second day it was just rebounding up very quickly. So that's about the U.S. market. So in all, the U.S. market, I would say it looks good, continue to be bullish. Of course, there will be some risk involved in the market, which I will talk about it, after when I talk about this TA. The third one is STI. STI is pretty complex, and that's why I end up drawing a lot of lines, because I would very much like to say that it is sideways market right now. But of course, I had to do a projections up to year end. So this is what I'm doing right now is this. So the market sort of like peaked in April. And since April, right, the index has been trying to, break this 3,200 mark. But the attempt has been unsuccessful. It has been rebound up and down, up and down. And yesterday it fell quite heavily, and today it sort of went a few points back. But then you can see that the rebound is still very weak. Means that the participants are not active. There are lack of interest in the market itself. So when people sell off, right, they are not eager to pick it back. Not like the US market, when people sell off, then they are, another group of people come in and pick up the bargain. Well, STI, you can see that today I think it open up with 10 points up, and then it closed with a very low numbers. So it's basically just fall within this. Now we are actually in a very short term kind of a dilemma, because these two sort of like converge at this point. So which means that it can either rebound from this point onward and break the trend, and then you continue to in a bullish cycle, or it could just fell off and then you will start to go down until it was supported by this 3085 level. So this is very, very short term. So I would say that STI for now, it is still sideways. We are waiting for directions. I can't tell where STI will be in tomorrow or the day after tomorrow. It really has to wait for 2 or 3 more days before we can tell the directions. Right now, I can only say this is sideways. In terms of most pessimistic, I would say that STI will be at around 3,050, 3,040 and 50, this range, right? 3050. Optimistic, it will go to 3400, right? 3400. So this is the range that it will be. I mean, if you look at the upside versus the downside, the win is actually quite high, because the projections is higher, and the low is, from today low is only like 50 points away, right? So let's say if you are looking at STI, I would say that the market right now, it seems like it's a good bargain, compared to US market. The PE ratios are now, despite the fact that I would say that the market will still continue to go up, but US market right now is really expensive, whether I like it or not, it is expensive. So the STI seems to be a bargain at this point of time. So that's basically my personal take on the 3 market index itself. Okay. So after this, these are 3 markets. So what are the risks in the market right now? I'm referring to more of a global basis rather than just on market, because whatever happened globally, STI will somehow be affected as well. So the number 1 risk is, of course, the rise in Delta cases in Europe and US, not to mention Asia as well. Would there be a so-called a massive lockdown in those countries or not? We do not know. Assuming that come to a point of time whereby, just like last year, the Western world, they were quite relaxed about this COVID thing until they found out that it is something, not to take for granted. Therefore, they have this massive lockdown and, create a lot of chaotic. So we do not know that if these Delta cases will have a similar impact as last year. Obviously, in my mind, I hope that it won't. But looking at how the Western world has doing things in their policy making process, it does give investor some form of worries. And in fact, the Monday sell-off partially is because of this reason as well. The second point is inflation in US. This is basically an economics issue. So it is very real. In fact, every analysis, every economist in US is talking about this high inflation rate in US, except the Feds are denying it, and they feel that they can prolong, this decision-making process. So that is something, is a time bomb. Somehow or another, the Fed has to do something, and the market is just waiting for the Feds to open their mouth, to take actions. So that's a potential risk. Third one is slow China growth. You all probably have heard about 2 things in China. One is the cram down of the tech stocks, not allowing tech company to continue to acquire companies, or forbidding them to buy foreign asset and things like that. So that's the one that's probably mostly reported in the news since perhaps 1 month or even 1.5 months ago. The second one is probably you all do not hear that often, but then it is definitely affecting the China GDP this year, is that the housing policy in China. And because of this change in the housing policy in China, first tier city, second tier city house price has actually dropped tremendously, as some of it dropped as much as 30% overnight. And a lot of the third tier, fourth tier city, their developers are now in having huge debt. They are trying to, do current sales. The largest property company is called Evergrande, Hengda, are now in big trouble. And they have to work with banks and central government to, to resolve all these debt issues. So, so this slow China growth things is very real, and right now it is still contained within China. We wouldn't know that if these things will overflow to the rest of the world, and that is of course one of the potential risks that we will have to watch very carefully within China itself. Fourth is the escalations of conflict between US and China. I don't think I would need to elaborate further. You all would know it by now. And then the fifth point is the ineffectiveness of moderations. And so this is basically referring more towards monetary policy in the US. And right now, continue printing the money is useless really, because there are so much cash in the market itself. Any fiscal policy or any monetary policy they try to tweak or make by stimulating the economy has very, very little effect if they do not do any structural change in the broad economy basis. So, so that basically means that if there is, problems or things that is outside or that happens right now within this period of time, there's, the tools that they have is very limited now already. And then that basically tie back to point number 2, is that if the government trying to, or rather if the Fed's trying to balance between inflation and US growth, it's going to be a big task because they want to do a low inflation but high growth monetary policies. Right? It doesn't seem that it will work this time. On the other hand, it seems like right now it's high inflation and end up with a low growth. That's what the economists are concerned at this point of time. So that's basically the existing risks, and these are real. These are facts, and the concerns are there, right? But whether would this be causing the market to tumble or a black swan event, I don't think so. But there are issues there that the government and the Feds will need to solve it. In terms of bull and bear, so because of the uncertainty in the market, that is, so for me, from my personal point of view, I can't do a long-term predictions, or rather long-term at this point of time is not been supported by short-term reasoning. So rather than looking at long-term, I'm looking more of a short-term. So in terms of short-term bullish, obviously the sectors are still technology sectors. Anything that's related to EV, electric vehicle, clean energy, blockchain, all these will continue to bullish. So that goes with Singapore. If you look at some of the companies in Singapore right now, I believe this AEM, Sembcorp, ST Engineering, even some of those non-listed Singapore companies, they are involved more in batteries, in electric vehicle, in power, in solar. So all these are the new growth area, what I say. So we're we are not only looking at the companies itself, but we're also looking at their supply chain, which basically it will benefits, because this company, not only they are looking at the local market, they are also supporting projects in in Taiwan, in China, in US, and some of the Southeast Asia countries as well. 5G right now is only, I think if you're, for some of you have heard from me before, right now 5G is really at the infant stage. We are not even touching, we are barely scratching the surface of it. So anything related to 5G in terms of software, solutions, edge technology, computers, transmitters, antennas, infrastructures. So all these in 5Gs is definitely, to me, it's only one direction, so that's only going up. So 5G is critically interesting and important as well. Precision engineering, these are basically talking about companies who supplies to semiconductors, so these are the companies who, clean room, semiconductors, chip designs, all this stuff will be supplying to the US or Taiwan or even China, chipset companies. These are this company will basically benefit from the the semiconductor growth in those areas. Then the fourth one will be USD. USD for short term is going to be bullish. That will mean that gold will be bearish, by the way. So short term bearish, China equity. So I don't have to explain further because of the of the slowdown of China economy. China equity as a whole, it's not. It will sort of like sideways, or in fact go slightly downwards toward that. Tech company is the one that is being affected most. Tencent, JD, Alibaba, Pinduoduo, including the DD Global. All these, as you can see, that the share price has been coming down quite a lot. But this company are undervalued company. They are severely undervalued right now with the closing price of last night and today. In terms of, if you are looking at the Hong Kong market, all these tech stocks are severely undervalued now. So, but then again, because of this China government, very proactively trying to, to stop this company for doing something which doesn't fit into the China government interest. So that's why now the price is pretty depressed. All right. In terms of commodities, I'm still bearish on copper and gold as well. So this has been chased up. The price of these two commodities has chased up previously during the economy recover stocks, but right now they seems to be overvalued, and I'm short-term bearish on these two commodities. So with that, I end today's presentation. I hope you have learned something. I'll be happy to answer questions towards the end, or you can type the questions. I'll be more than happy to answer them too.